Well, it certainly has been a pretty wild time in the market. I really do believe this is playing with fire. And we're a bit concerned. I've been getting the question, what keeps you awake at night? Honestly, the one thing that keeps me up at night is that as the market goes down and our strategy is punished disproportionately, what keeps me up at night is knowing that some people are going to panic if they're looking at their accounts on a day-to-day basis. I think that the innovation stocks that have been pummeled in here, many of them are a quarter to a third of where they were earlier this year. I believe they are going to be the big winners once we confirm the inflation is transitory, that there's a recession risk out there. And when there's a fear of a recession, value stocks get hit hard. And I do believe there is something to this. And when inflation gets hit, value stocks get hit hard.
In today's video, Cathie Wood has a warning for stock investors about a big crash that will affect large parts of the stock market, some numbers showing that the internal combustion engine industry is already collapsing, fears about a recession in China which could have widespread implications. Cathie Wood also discusses a $10 trillion opportunity over the next decade and why she firmly believes that Ark Invest ETFs could see a 5x increase over the next 5 years. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
Well, it certainly has been a pretty wild time in the market. I've been getting the question, what keeps you awake at night? I can tell you, honestly, the one thing that keeps me up at night is that as the market goes down and our strategy is punished disproportionately, what keeps me up at night is knowing that some people are going to panic if they're looking at their accounts on a day-to-day basis.
This is a very important point from Cathie Wood. Now, brace for impact, you're about to hear a cold, hard truth. Any investors who panic are not cut out for investing. Much better for you to stay safe, ask your daddy to hold you and pat you and tell you everything's going to be okay, and stay the fuck out of the stock market. I'm serious, by the way. People who tend to have strong, intense emotional responses to things occurring in the stock market are prone to make colossally moronic decisions, like panic selling at a gigantic loss. The good news is people can learn, grow, and evolve. Some may need to learn through expensive mistakes. Others can learn from the mistakes of others. If you're the kind of investor whose stomach churns when they see their stocks are down, their investment portfolio is down, they've lost X amount of money today, you probably need some help or some rules. For example, don't check my portfolio more than once a year or something along those lines, or at the very least, you need to do a little bit of growing lest you make some incredibly expensive mistakes. Now, just before we move on, one final point here. I never bother responding individually to morons because it's a complete and utter waste of my time. However, I will occasionally respond to moronic thinking to benefit many other people, like on a YouTube video where 40, 50, 70,000 people will watch. I've recently seen a lot of what I would call absolutely moronic commentary and thinking around Ark Invest and Cathie Wood. A lot of people who, I'm not going to name names, but I will be honest, are completely fucking brain dead, at least on this particular topic, saying Cathie Wood doesn't know what she's doing, her funds are down, they can't be sustained, they're going to have to close down, blah fucking blah blah blah. Now, I suspect that the majority of these people are either emotional infants and or morons and or just don't understand Ark Invest and Cathie Wood's investment strategy or time horizon. It's not fair or intelligent to assess the short-term performance of a long-term investment strategy, which is inherently and openly acknowledged as being very volatile. So a couple of really quick tips. 1, if you can't put your emotions to the side, stay the fuck out of the stock market. And 2, if you're going to critique anyone's investment returns, make sure you also understand their investment horizon and are looking at their returns over that entire duration. Otherwise, best to just shut the fuck up.
We keep saying, almost every time I talk, I say we have a 5-year investment time horizon. At the moment, we are close to, from an expectations point of view, a record in terms of what we expect from our portfolios during the next 5 years at a compound annual rate of return. I've seen it only higher once, and that was after the rout in the fourth quarter of 18. Based on our expectations at that time, we believed that our portfolios would deliver a compound annual rate of return of 42%. So that's 42% over 5 years. That's more than a quintupling. And we're just about there again. So again, ahead of just spectacular growth rates, exponential growth rates associated with the innovation platforms, DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. And even more importantly, the convergence between and among those platforms. We believe that our companies, from a revenue growth point of view and ultimately a profit growth point of view, are going to show exponential growth rates. And we would assume, now we may not be right, but we would assume that the stocks would award them, or the market would reward them accordingly.
I strongly agree with Cathie Wood here. Now, for those of you that don't know, almost 5 years ago, I actually purchased the ARKW ETF and the ARKQ ETF. Now, why did I do this? I'll cut to the chase. When I was building my stock portfolio, I came across Ark Invest and thought, damn, these motherfuckers are doing the exact same things, buying the exact same stocks for the exact same reasons that I'm doing. They think like I do. They reason like I do. I'm going to be right. They're going to be right. Here's some money. That's literally how it went down. So the reason I'm so confident in Ark's strategy is because I've reasoned the same way and drawn the same conclusions. However, because I'm not managing capital for other people and I have an abundance of testicular fortitude, I'm happy to go all in on a single stock. When Tesla dipped in 2019, I liquidated my Ark Invest ETFs, bought the Tesla dip. I think it was around $35 US per share, split adjusted. Obviously that worked out okay. I think I'll destroy the returns of all the Ark funds over the next 5, 6, 7, 8, 9, and 10 years, but they're managing capital for other people who are probably a little bit too squeamish to be all in on a single stock that's as volatile as Tesla, up or down 10, 12, even 20+% in a single day. And by the way, I really do stand by my claims that I will crush Ark Invest returns over the next 5+ year time horizon. For those that don't know, you can access my Tesla stock price targets all the way out to 2031. 22, 23, 24, every single year between now and 2031, exclusively on Patreon. Check out the card in the corner or the link in the description. I've got a bear case, base case, and a bull case. Even in my bear case, which I'm assigning just a 5% probability, I still have about a 5x over the next 5 years. My bull case is significantly above this, more than a 10x from where we are today. And between my base case and my bull case, which are way more than a 5x, total combined probability 95%. This is why I'm so confident that I'm going to crush Ark's returns. And please keep me accountable. This video won't be going anywhere. So December 2026, let's check back in and see what's happened.
So with that said, let me talk a little bit about FUD, fear, uncertainty, and doubt, in a market when Chairman Powell, Federal Reserve Chairman Powell, sort of changed his mind from inflation is transitory to perhaps it's not transitory. I think that has unnerved the markets. And we've got investors and analysts fleeing back to their benchmarks. Our strategies typically include stocks that are not in the broad-based benchmarks. And so our stocks are the ones they sell in order to move back into the benchmarks. I've been through this time and time and time again. This is no different. And so we usually do the opposite. We know they're throwing our stocks out, and therefore, instead of trying to get close to any benchmark, and as you know, we don't have a benchmark, we're looking to the future, not the past.
What a crazy, ridiculous, stupid idea Cathie Wood there, talking about an investor looking to the future rather than the past. I mean, how dumb is that? It's not like the future determines your returns on the stocks you own today. Oh, wait.
We concentrate our portfolios towards our highest conviction names and toward those stocks that have been punished disproportionately and we believe unfairly in the marketplace. And just to give you a glimpse of what I mean, our portfolios, our strategies have been associated with stay-at-home stocks because they treated us so well during the coronavirus crisis. But the point we've been trying to make is that the world has changed permanently because of the move towards increased digitalization. We're not going back. And therefore, we think that you should start thinking about these stocks not as stay-at-home stocks, but stay connected stocks, stay competitive stocks, stay globally competitive stocks, because that's what we do. We're focused on the way the world's going to work and really transformational growth. Our confidence has increased that inflation is going to unwind, and probably more dramatically than most are thinking right now. We would submit that we believe the economy will not drop into a recession, but we do believe there's going to be a recession scare next year, and it has to do with inventories. We believe that inventory are beginning to pile up. I've mentioned before, they've piled up in our homes as we now have hoarded for Christmas, before we normally would during Christmas time and Hanukkah. So that's been the first source of inventory accumulation. We see a number of other sources, and I'll go into this in a little bit more detail when we talk about the economy. So we think we'll skirt a recession, but we think that the inventory drawdown is going to cause serious dislocations in pricing, whether that's commodity prices or finished goods prices. So stay tuned for that. And China, the government, is aiming at the heart of that economy in an attempt to achieve common prosperity. Now, what is the heart of that economy? It's real estate. Real estate accounts for 75% of consumer savings in China. Pricing is coming down as the government focuses on deleveraging in the real estate market and actually getting rid of a lot of tycoons who are not consistent with common prosperity. And as I mentioned, I think on the last YouTube video, I really do believe this is playing with fire. We're a bit concerned about how rapidly China's economy will slow down. It already has slowed down, but how much more does it have in front of it in terms of a slowdown? And we are watching some commodity prices suggest, like iron ore, down more than 50%, suggest that perhaps the slowdown there could turn into an outright recession, which China has not seen in more than 20 years.
Well, if Ark Invest are right there, that doesn't exactly sound great. A very real risk of a recession in China. How do you believe this would affect the electric vehicle market and the electric vehicle landscape in China? Well, personally, I think there would be a massive consolidation. There's well over 100, maybe 150, 200 plus electric vehicle companies in China today. I think during a recession, the majority of these would evaporate, disappear, go bankrupt, consolidate, and merge. And there's actually a silver lining here. Should this occur, this is going to free up a huge amount of supply, not only of materials and batteries, but also parts within the supply chain. And who's going to be there to soak up all this extra supply? Starts with a T, ends in I'm all in on their stock.
We also got word that from Adobe, which measures online sales during Cyber Sunday or Cyber Monday and Black Friday, that weekend. And it looks like online sales are negative. Online sales negative year over year. Now, online is responsible for about 20% of retail sales, and those are down. That is not a good sign, especially because many of us still seek the convenience of online instead of going into stores for our purchases.
Yeah, this is really bad. Really, really bad.
There's another very interesting retail phenomenon taking place right now, and we've talked about this before. It's in the auto space. I mentioned last month that auto sales surprised on the low side of expectations, and the auto companies were saying chip shortages. That number was 13 million units at an annual rate. This is here in the United States. Well, this last month, November, they were 12.86. Their expectations were a little bit of an increase now that automakers are saying the chip shortage is diminishing. But instead, they went down. And I think what this is saying is that a lot of consumers bought that extra car during the pandemic to avoid mass transit, and they're going to wait for a while before the next car, wait until electric vehicle prices come down further, or wait until they actually need a car. So I think that part of the story is also playing out.
Now, we can't know for sure yet if Cathie Wood and Ark Invest are right here, but I've got a funny feeling they are. It seems to me like there was coincidental timing around the chip shortage. There's a huge fall off in demand for the internal combustion engine vehicle. We're just starting to see the beginning of the collapse. and this is going to become more evident in the following quarters. My hunch is that the chip shortage actually temporarily masked the beginning of the collapse of internal combustion engine vehicle sales, but in the next couple of quarters we'll start to see this really play out, and it is going to be brutal. What do you guys think? Are we going to see ICE vehicle sales continue to collapse quarter after quarter, especially in the United States, or are they going to strongly rebound after the so-called chip shortage?
Businesses which had been scrambling to build inventories because their shelves were going bare during the coronavirus have now ordered too much, and we are going to have a significant inventory overhang. In fact, I wouldn't be surprised if a lot of that 7% growth in the fourth quarter, that's an annualized quarter-to-quarter growth rate, is in inventories. And in fact, in the third quarter, which we know already, real final sales were flat and GDP was up. Real GDP was up 2%. All of that was in inventories, all of it. And so very interesting. I don't think this inventory story is being told.
Now, this does not paint a pretty picture. For those of you who aren't sure what the Cathie's talking about here, try to explain quite simply. Effectively, all of the GDP growth, the growth in the economy that we saw, this 2%, appears to have been all inventory build-up. In other words, businesses buying materials at wholesale and also producing products to sell to consumers, but not actual consumer purchases of said products or materials. That activity looking like the economy is growing, but actually it's just a bunch of companies with too much shit that they need to get rid of. It's not going to end well. Okay guys, pay close attention because Cathie Wood now has a very serious warning for stock investors about a potential crash in some segments of the stock market.
Now the stock market, again, year to date, we've got energy up 45%. We've got financial services and real estate up roughly 30%. Value has been screaming this year. But I have just given you a scenario that would put a screeching halt to that move toward value stocks. And that's this inventory buildup. The value stocks are the ones most exposed to it. So we'll see what happens. I think that the innovation stocks that have been pummeled in here, many of them are a quarter to a third of where they were earlier this year. I believe they are going to be the big winners once we confirm that the inflation is transitory, that there's a recession risk out there. And when there's a fear of a recession, value stocks get hit hard. And I do believe there is something to this. And when inflation gets hit, value stocks get hit hard. So stay tuned for that.
So in case you missed that, Cathie Wood predicting growth stocks, shout out to the likes of Tesla, etc., potentially a huge explosion in value. But on the flip side of that, value stocks going to get absolutely crushed. A huge crash in value stocks in the stock market if Cathie Wood and Ark Invest are right in their thinking and reasoning.
The other thing that I'd like to tell you, now these are just our strategies, but my guess is other innovation-oriented portfolios would have these sorts of opportunities. At the peak in February, our strategies, according to our estimates, which as you know, Wright's Law plays a central casting role, our strategies, we believed, were going to deliver a 15% compounded annual rate of return over the next 5 years. So that's a doubling over 5 years. Not bad, nearly twice as much as what equity markets typically deliver over time. Today, assuming that our valuations are crushed down to FANG-like multiples in 5 years, we believe that our strategies, certainly the flagship, all of the innovation platforms together, are going to deliver close to a 40% compound annual rate of return. That's a quintupling over 5 years.
A 5x return over 5 years, not too bad. I'm very curious. What do you guys and girls expect for your own stock portfolio? What are you aiming for in terms of the minimum return over the next 5-year period? Let me know in the comments below.
So we actually are much more comfortable today than we were in February in terms of the outlook for our strategies. Most people have never seen exponential growth, and they certainly haven't seen convergence of exponential growth trajectories that we see, for example, in autonomous taxi networks, the convergence of robotics, energy storage, and artificial intelligence. So one S-curve feeding another S-curve. We think that delivers $10 trillion in revenues. In in year 10 in 2030.
Now, it goes without saying, but I'm going to say it anyway. A $10 trillion opportunity in 10 years' time. Absolutely ridiculous. And for those of you who are curious, my Tesla valuation model, which is also available exclusively on Patreon at the investor support level or above, check out the card in the corner or the link in the description to join Patreon. You'll get access to that. My price targets, a ton of exclusive content and plenty of perks. Has Tesla capturing approximately 10% of that opportunity in 2030 with a 30% platform fee, equating to around $322 billion of extremely high margin revenue just from Tesla's cut of that approximate 10% share of the total robotaxi market. And this is in my bull case. Just curious, what percent of the total robotaxi opportunity do you guys and girls think Tesla will capture in 2030? Let me know in the comments below. And again, if you want to see all of my detailed assumptions around Tesla robotaxi and everything else in my valuation model, check out the card in the corner or the link in the description to join Patreon.
Now, if that's right, that's from zero. The returns are going to be phenomenal for any company involved in that particular space. So with that, I'd like to thank you and once again express our confidence in our strategies over the next 5 years, and just hope you'll join us in some way, shape, or form, even by just reading up on these strategies on ARK-invest.com to help you understand how much the world is going to change.
And I want to echo Cathie Wood's closing words there. Whether or not you're invested in the ARK ETFs, don't really care about that, but it's extremely important for everybody who's living on planet Earth today to understand the amount of change that's just around the corner. I don't think anyone is really prepared. Hope you guys have enjoyed today's video. Cathie Wood, not mincing her words, pointing out that there's a very real risk of a recession in China. There's the potential for a huge crash in the stock market, specifically with value stocks. We're beginning to see evidence that the internal combustion engine vehicle market is beginning to collapse as expected. And there's going to be a lot of disruption and, shall we say, excitement in the stock market in the coming years. Make sure you're on the right side of that change. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.